I'm Owen Bigland. This is the Inside Edge video blog. This blog is going to be about getting qualified for a mortgage, some of the new mortgage changes, where I see interest rates going, and really what my inside guys at some of the big banks see mortgage rates going. Now, I have several senior guys at both Royal Bank and TD. And whenever somebody comes to me and says, "Oh, and I need to get a mortgage," whether they're a first-time buyer or buying an investment property, whenever possible, I tell them that the biggest mistake someone can make is go down to your local bank, talk to the teller and say, "I want to buy a house," or "I want to buy an investment property." Do not do that. I've blogged about this many times. What they're going to do is they're going to put you off to what I call a paper shuffler. They're going to take your application, get some basic information, check your income, that kind of thing, and then they're going to send everything off to Toronto, to some decision maker in Toronto. You never want to do that. And that's why whenever possible, I like to get clients, buying clients, in the early stages where they haven't gone down to talk to a lender yet. And I will put you in touch with one of the senior guys. Senior. These guys have signing authority. They are senior reps with both TD and Royal Bank, which are kind of my two go-to banks. That's who I do my business with. I've got others too. I've got independent brokers as well that I can refer you to. But whenever possible, TD and Royal Bank are my two go-to guys. Now, again, these two they have signing authority. They can get you approved. Biggest mistake you can make, as I say, is going down to the bank and saying, "I need a mortgage." Now, on that front, these guys both give me a lot of updates on where the mortgage rates are going, what's coming down the pipe for new restrictions, or maybe some new changes to the mortgage rules. So, a few things that I want to share with you guys. It looks now like maybe these 3 or 4 rate increases that was looking like we were going to have last fall are off the table now. We may get 1/4 point hike this year. I'm hearing from many people that the Bank of Canada might keep interest rates firm, just like they're doing with the Fed in the US. They have gotten much more dovish now as opposed to being hawkish that they were last fall. And that's really what drove the stock market down at the end of the year. Now the Fed in the US is backing off on that, and we may not have very many price or rate hikes at all. So from a couple of my mortgage guys, they tell me that we just might see a 2.99% 5-year fixed rate coming out later this spring or summer. So that is an incredibly good rate. Right now, I think we're hovering around 3.25, 3.4. So don't be surprised if we actually get a little bit of an interest rate reduction here coming later this spring or fall. So that's good news. It will definitely add to people's buying power for sure. The other thing that may be on the table now, you know, the Mortgage Brokers Association, the real estate boards in Canada have petitioning the federal government, you know, about, first off, the stress test. Now, that stress test has put a cold bucket of water on the Vancouver market for sure. Because, you know, you're having to qualify for your mortgage at the posted rate plus 2%. Now, back when that was introduced last year, you could get a variable rate at 2.5%. That made the stress test rate at about 4.5. After 3 rate hikes, you know, we're now up to 3.5 on a 4-year or 5-year fixed. Now you add another 2 points to that, that's at 5.5%. Now, I'm in the camp, and I know a lot of people will disagree with me, but I think that they have that pendulum swung way too far to the conservative side, having to qualify at a 5.5 or 6% rate. That's basically put slashed a typical buyer's affordability by about 30%. And that is the main driver why sales in Vancouver and Toronto have gone down substantially here, sales volume. Now, there's talk that maybe they're going to try and back off on that a bit later this year. Instead of a 2% stress test, maybe it'll be a 1%, which I think is a good idea. I know I'll get some thumbs down here, but I've said this many times before. Canada is nothing like the United States. Nothing. Getting a mortgage in Canada has always been very, very difficult. If you have tried to get a mortgage or you've got a mortgage, you'll know what I'm talking about. They have tightened the screws on getting a mortgage continuously for the last 5 years. The stress test was just the last nail in the coffin. Many people now, a lot of people, most of my buyers now are doing conventional mortgages, 20% down or more. You can still qualify for high ratio. 5% is still there, but it's virtually impossible. Forget it. Most people are putting down 10, 15%. And again, a lot of people are taking out conventional mortgages. So they're not over leveraging. Having to qualify now that interest rates have come up 75 basis points at a 5.5 or 6% rate is overkill in my opinion. But I know I'll get detractors that say, oh, you're a typical realtor. Of course you want the interest rate and the stress test to go away. It'll help your business. Again, this stress test was brought on because many consumers, many buyers were taking on too much debt, apparently, or buying too much house. They weren't my clients and any of the colleagues I work with. As I say, most of my buyers are putting down 20%. Was there people that were taking on too much debt? Of course there was. There's always going to be that. There's always going to be people that are going to secondary lenders, buying too much house. They can't afford it. Interest rates at 6 and 7%, which is nuts. But they are a minority of the buyers. Keep that in mind. The typical Canadian is pretty conservative with their financing. These banks are very conservative. I think rolling back the stress test from 2 to 1 would be a step in the right direction. The other thing they're considering doing is bringing back 30-year amortization. And I know we'll get a few thumbs down on this too. Now, if you are going to take out a conventional mortgage, which again, I would say at least half my buyers now are putting 20% down, then you can still get a 30-year mortgage. They removed those a few years back for high ratio, under 20%. So now there's talk that maybe they will roll back those 30-year, or put back the 30-year mortgage for less than 20% down, or what we call high ratio financing. Again, I don't know either way with it. I think it'll definitely help some people because the 30-year mortgage will probably boost their affordability by maybe 5%. Because, you know, removing that 30-year amortization, of course, and the stress test, it's meant so that people are leaving a buffer, which I've blogged about so many times. But, you know, it's really in a lot of ways doing the reverse of what people were hoping. Yeah, it maybe is helping people be a little more fiscally conservative here. But it is pricing a lot of people out of the housing market. And wasn't that the whole idea here? The mandate of the government is to get them out of renting and get them into buying their principal residence. That's where it's at. But of course, the stress test and the 25-year amortization as opposed to 30 is squeezing a lot of these people that were on the edge of getting qualified. They're now forced to become permanent renters. So I know people are going to say you sound like a typical realtor, but probably a step in the right direction here to add that. I think they were overkill on that stress test. You know, but to be honest, we'll see. I have a feeling they're going to keep the 2% stress test here for a while longer. I don't think they're going to roll that back. I think they might, though, probably put the 30-year amortization back on high ratio. It's not going to make much of a difference, though. The big difference, though, going forward here and what's changed from just 4 or 5 months ago is it doesn't look like we're going to get the mortgage rate hikes that we were expecting. And this will make a difference here. You know, I blogged about it many times last year about how, you know, you always want to leave a buffer for mortgage rate hikes because they really only have one way to go from here. But it sounds like we're going to have these low rates for some time to come. And we might even get a slight reduction here later this spring. Maybe, as I say, my last 2 newsletters, these guys are predicting 2.99% rate for 5 years. That's pretty darn good. So we'll see where this goes. But I think rate hikes for right now, at least anything major, is probably off the table for a while. I'm Owen Bigland. As always, thanks for watching. I'll see you next time.